Peak Wealth Management proudly presents the Trust the Plan podcast with Nick Hopwood and Jim Pilat, where we believe by providing education and guidance, we can help you retire with peak confidence. Now, here are your certified financial planners, Nick and Jim.
Welcome everyone to the Trust the Plan podcast. I am Jim.
And I'm Preston.
And we are here at Peak HQ while Nick's doing spring break. It's that time of year, spring break. Did you and Natasha have any spring break plans when she's off school?
We didn't. She had spring break a couple weeks ago and we didn't do anything, but we just planned kind of a long weekend trip to Pittsburgh.
Okay.
As some of our podcast fans may know, I'm a pretty big Pittsburgh Steelers fan, so we always go like during the fall winter time for a game.
Okay.
But I've never gotten to experience the city when it's actually nice outside. So
Nice.
we're going to go in a couple weeks here.
That'll be cool.
Yeah.
Three Rivers. Plenty to look at there, right?
Yeah.
Very cool. We actually did take a little bit of a spring break trip with the family. It was different this year being down one because the college spring break doesn't line up with the high school spring break, but it was all good.
Where'd you guys go?
We ended up in Florida for a couple days. It was kind of a sandwich between a couple of volleyball tournaments for my daughter, but we made the most of it and went down to Destin, Florida, and enjoyed some sun.
Cool.
So, yeah. Well, anyway, we had a topic today that we wanted to chat about, something that happened in the market a few weeks ago. We've obviously been seeing a ton of volatility lately. Seems like every time the word tariff comes up, the market's going to move one way or the other, right? It's been pretty interesting. So what we had been seeing a couple weeks ago was seemingly bad news. The market was getting crushed and nobody knew what to expect. And there was a lot of market uncertainty. So the market wasn't responding well to it. And we were seeing bad days, right? Kind of one after another. And then out of nowhere, Trump made an announcement that he was going to do a 90-day pause on tariffs. And what did that do?
Market skyrocketed.
Right? It did. We had an incredible day, like a record day, really, point-wise. But percentage-wise, I think, what did it come in at? 10, 12% between the S&P and the NASDAQ?
Yeah, something like that. I just remember Nick and I were sitting in a client meeting, and then at the end of the meeting, Nick started going over performance reports like we do in every meeting. Mm-hmm. I was like, we might want to pull up the live numbers because Trump made an announcement while we were sitting here.
Yeah, and the market made a huge 180, and it went up and closed up way higher that day. And since then, we've had some more volatility, but it got me thinking about a chart that I'd seen in the past and I thought was really valuable because in the midst of the volatility, what do we talk to clients a lot about, right? Stay in the course, not making knee-jerk reactions, stuff like that.
Yeah, trust the plan.
Trust the plan, yes. Trusting the plan, making sure that we're not going to shoot ourselves in the foot because we don't like what's going on in the political environment or whatever. This is where we think we kind of prove our worth as planners by making sure that we have money set aside. We have a time horizon, in consideration with the investment recommendations and so forth. But we get no shortage of calls that people who call and say, the market's going down. What should we do? And what do they want you to do?
Yeah, they want us to press the magic button that makes everything go away.
They do, or they want to get out. They say, I want to just get out. Let's sit it out. Let's wait for it to be done going down, and then we'll get back in. But, we've seen it so many times in the past that, calling a bottom, calling a top, getting in and out at the right time is just so hard to do. So this chart, I think, illustrates this is great. So I went and kind of found an updated one. And what this chart says, if you can see it behind us here, for those watching on YouTube, this says, what happens if we put $10,000 to work in the market and we simply leave it invested every day for 30 years? So this is from 1995 to 2024. What is the value of that $10,000 if we didn't take it out, if we didn't try to time the market, if we rode out all the bad markets that we've seen think of that time period, 2000, the tech bubble, 2008, the financial crisis.
The entire 2000s, the lost decade.
Yeah, all of that time. So we're talking about a lot of really bad time periods in here, even going back to the COVID stuff and the 2022 bond market that was so bad on top of the stock market. So if you were to leave that $10,000 invested for that 30-year time horizon, it would be worth $224,278. Pretty solid return, right?
Pretty incredible return, I'd say.
Yeah. Didn't you crunch the number? What did that work out to annually?
Yeah, it was like 11% or so.
11% on the S&P. So that was great. But this is the part that I find just fascinating is what happened if you missed only the 10 best days. You only were out of the market for 10 days, but it so happened to be the 10 best days. What is the value of the account then? Drops by 54%. It's only $102,750.
Yeah, and I didn't crunch the number on that rate of return, but if the main scenario is 11%, that one's probably 5% on average.
Right.
Imagine getting your average rate of return over 30 years cut in half because you pulled out for 10 days.
Right. And some would say, well, if we miss all the bad days, then we would be better off. Right. But the problem is we don't know when those good days are coming. Right. And we saw a perfect example of that, like we talked about earlier in the show here, where out of nowhere, right, just a one announcement and boom, the market rallied 10, 12% in one day. We just don't know when those come.
Yeah, and it even goes back, I think it was within the last couple of weeks, we did a podcast episode where we had a chart up here about investor emotions and riding the cycle. It goes up and it comes back down. And when it's at the bottom, when there's the most pain, usually ends up being the best time to have invested money. And it goes to show last week was incredibly painful because the market was so volatile all week. People who were concerned are calling and, we're having these conversations, trying to keep them in the market, keep them invested. And, like I think it was Wednesday. So middle of the week was the announcement when the market went up so much. Imagine if someone calls Monday, Tuesday, and they're like, I'm in so much pain. I can't do it anymore. Take my money out.
Right.
And they just perfectly timed the example of this chart where you miss one of the best days.
Yeah. Yep. Yeah, for sure. So just kind of finishing that, the rest of this chart here, if you were to miss the 20 best days, your rate of return drops 73%. It's 73% less, I should say. Only 60,000 left out of the original 10,000 you invested. And if you miss the 30 best days, drops all the way down to 38,000. So 83% less than if you just left it the whole time.
Yeah, it's remarkable.
So, none of this means that we can't still have conversations with clients when the market's bad. We want to talk it through. We want to be there to be a sounding board. We want to make sure that, if goals have changed and things, that we're planning for them accordingly. But by and large, we want to get the risk tolerance right at the beginning so that we're not feeling so much pain that we have to get out, because as this chart's showing us, we don't know when those good days are coming, but if we miss them, we know that we're hurting the portfolio long term.
Yeah. Yeah. And exactly what you said. This is why every single meeting we have, we're reviewing performance, of course, but also how do you feel about risk? In 23 and 24, every meeting we're saying, if you want to dial back risk, if you're feeling like I can't go through that again, let's make the change now.
Yep. Great advice. So if you have a portfolio that you would like to discuss, that you have questions on, that you're not sure if you're at the right level of risk, please reach out to us. You can visit us at peakwm.com. You can schedule online. We'd be happy to talk with you and make sure that we have built you a plan that you can trust.
Peak Wealth Management thanks you for watching and listening to the Trust the Plan podcast, featuring certified financial planners Nick Hopwood and Jim Pilat. If you enjoyed our program, please subscribe and share. If you'd like to learn more about our services, please visit peakwm.com. peakwm.com today. See you next week.